Hello, YouTube. Welcome back to the Wealth Catchers channel. Hope you guys had a great week so far. So, just going to tap in and see how this past week went in the market and what we can look forward to next week. As we know, this week was very eventful. NVIDIA's earnings, and we had that last little rally to close out the week. It's still in the negative, but got a couple slides to break down here, and let's tap in. And also, don't forget to subscribe, like, share. You can also leave some comments down there. Anything you want me to talk about, dive into. I will have more videos to upload to the channel. Currently have some in the vault right now that I have to record and then load up. Just wanted to get this one out first since this is so fresh. And just a disclaimer, this is not financial advice. I'm not a financial advisor or fiduciary. This is just for educational purposes. So let's dive in. So as I mentioned earlier, week ended off pretty bad, right? So S&P 500 down about 2%, Nasdaq down almost 3%, and the Dow Jones down basically 2%. So from all that, you could tell just overall the market was having a pretty rough run at it, which is not kind of surprising based on everything we've been seeing leading up to this point. It was really banking on, NVIDIA coming through. So some of our market drivers, right, that impacted this week's market performance. Obviously, leading up to this, we had the concerns about AI spending, and then seeing a stock like Nvidia still ended the week down almost 6%, even after having blowout earnings, eye-watering numbers, everything you can imagine. Because I think I mentioned in our last video, like we know they're gonna beat, and we just know that they're gonna do good, but it's gonna be based on how the market interpreted it, right? They did a phenomenal job. I don't know how else they could show y'all that, hey, it's working. Hey, what we got going on? They're bringing in revenue, they're bringing in the money, but it's just that like I don't know, that feeling that something's got to be wrong. And I think that's what everyone's feeling. And then again, I think I mentioned this as well. Like it becomes like contagion. Like if one person starts saying it, then another, and then overall this cloud starts coming over everything, and everyone starts operating off of that sentiment, how they're feeling, right? So with Nvidia, they did not save the market. Everybody's looking for them to be Superman and prop the market up. They did have a nice pop after hours, and then leading into the next day, it ran like crazy, right? Market was doing good. I think I want to say about 10 o'clock, 10:40, I think, or 11, just started tanking. So it was one of those, I guess you could call it a dead cat bounce, where we've been down for so long, had a nice little rally, everyone thinks things are going great, and then it's like a rug pull, like a gotcha, you know? So just another sign to be mindful and be aware of what's going on. Don't take too much risk. I know a lot of people put some option plays on earnings, which is something that, I get it, but also it's too much risk, in my opinion, to put options on earnings because you could have a great earnings report, you could do amazing, stock could still tank. Stock could be having a terrible earnings report and it still runs up like crazy. So just be careful with things like that. Know your price points, your entries, know what to stay away from, and then approach it with a long term mindset, right? Shield yourself as much as you can. And then after the NVIDIA earnings, we had a Fed, someone that works on the Federal Reserve, right? Like the board, along with Jay Powell and all of them, came out of nowhere, had like a little, like showed some face and said some stuff, which led to a nice rally on Friday. We'll touch more on that later on in the video, but it was definitely something that came out of left field. I was like, why is that being said? Let's hop on to the next one. So sector performance. So we're gonna dive into like what's the best performing sector, what was the worst. So healthcare went crazy, had 1.83% return, and a big part of that was Eli Lilly. if I know we're new to the YouTube channel, but the Wealth Catchers website has been running for about a little over 4 years. And Eli Lilly has been, I want to say, on it for the past 3 years, or maybe more, maybe 4 years. But Eli Lilly has been on the watch list for a long time. It is one of those companies that is just very powerful, top of the class, best at what they do, and they had a big impact on healthcare having such a great run. They also hit an all-time high year to date. They didn't start the year off looking good. They had a nice little dip in there too. Everyone's running away and avoiding it because of all the stuff with um RFK and how he was coming after certain drugs and all pharmaceuticals. So people, stocks like Eli Lilly, Novo Nordisk got destroyed, decimated, right? But people keep on forgetting that GLP-1 drugs, the weight loss drugs, that's not Eli Lilly's bread and butter. Like they make money other ways. They just look at GLP-1 as like, I could make money in this, so why not? But people are always, I feel like, forgetting that they don't need that to make money, right? So they proved it. And then year to date, I think they're up like 36%. So good on them. Again, another thing, pay attention to your price points. Story doesn't change. Still a good quality company, quality names, quality entries. That's what we're looking for. Obviously we know tech sold off really heavy, especially with everything going on with the AI trade, the the circular economy, the I'm paying this person to pay that person who's going to end up paying me, then the data center build out, and all these worries. So definitely led to a lot of selling off in the tech sector, and also you got to combine that too. A lot of people are taking profits. A lot of people are all worried. A lot of people are just trying to lock in some gains. And then we have consumer staples, kind of eked out positive. Big parts to Walmart. Walmart showing that people are still out there buying, but also we got to keep in mind that what I mentioned in the last video, the top earners are really what's propping up the economy, right? So we do have to look deeper into that to understand where that money is going. Yeah, they're making sales, but is that because the top earners are stepping down to put money into I wouldn't call Walmart lower tier, but Walmart's pretty much where everyone's gonna go to. They're trying to find the best price. You know what I'm saying? When the economy's doing pretty better, people feel a little more confident about their pockets. Money's looking right. They probably gonna go to a perceived store that's cost a little more, like a Publix or a Target, stuff like that. Walmart's usually known as like when all if all else fails, that's where I'm gonna go. And also too, they're like so easy to find everywhere. So definitely big ups to Walmart for that, and also another good store too is Costco. Can't forget about those two powerhouses. Tap into the economic and Fed insights, all right? So we did get the jobs report. This should have been for September, I believe, because remember we had the government shutdown, a lot of data wasn't released, couldn't have been released. So we are now getting data, but again, it's behind because they should have been out in October. So this is a surprise, right? 119,000 jobs added. And for the next jobs report, it's going to be December 16th. And I believe they said they're going to be combining the October jobs report and November jobs report. They're both going to be reporting that in December for both of those months, right? So when I look at the jobs added, right, the jobs report, it's important, I think, to a certain degree. But again, I feel like it's important if you're a short term trader, looking through things through a short term lens. Long term investing, things like I said, a decade out, 2 decades out, I don't think you have to worry too much about it. It is something good to know, something to tap into, see what's going on out there. And then also we have the unemployment at 4.4%. That is an increase, but the safe, after doing some research, the safe number generally is between 3 to 5%. When you start getting over that 5%, then you can start getting a little worried about what's going on. But we're still in the safe realm. But as you know, the headlines, we still keep seeing companies laying off jobs, people getting fired, things like that. We saw Something I think kind of wild to me out of Amazon. They laid off a whole bunch of engineers, which is, that's a top tier, top earning job, and you wouldn't expect engineers, to get laid off. So, but there's those type of things to keep mind of and keep aware of. Don't let it guide your investing decisions and all that stuff, but it's just something to know what's going on in the background, right? And then now this is what I mentioned earlier about the Fed, right? So we had his name's John Williams came out, had a little, had some comments, and basically sum it up. His comments led towards a belief that there will be a rate cut in December, right? So market took that and ran with it. I think the Dow Jones ran up to I think 500 or 600 points that day. S&P rallied, Nasdaq, everyone was going crazy. Obviously, it wasn't enough to make an impact on the week, but that one day move, based on him saying that, and also to look deeper into it, he's someone that's pretty notable, right? Even though he's not, he doesn't have notoriety of Jay Powell, right? Jerome Powell was like the face of the Fed, but people are looking at it as this guy wouldn't have come out and said that, right? Unless he kind of had some approval from Jay Powell. And if that was to have come out and Jay Powell didn't approve it, I'm pretty sure Jay Powell would have came, did his own thing later on to like, hush it down. But the fact that he was able to come out, say that, and kind of gave a nudge like, hey, we're going to cut rates, that sent the market in a frenzy. And obviously, we got other people on the Fed board, right, that don't want to cut rates. We have a few of them that believe rates should stay where they're at. Some of them voted against the prior cuts. They're just really worried about inflation risk, right? So you got Susan Collins, and keep in mind both of these people are both voting on this next Fed rate cut or hike. I mean, not cut hike, but cut or pause. So they both have votes to put in for it. She's someone that's erring on the side of caution, which is understandable. She doesn't want inflation to run rampant again. Plus, we work so hard, to get it back down to where it's at. So she's just one of the voices that is wary of like, hey, I'm not gonna excuse me, gonna vote for rate cuts. I'm just gonna, say we should keep it paused and wait till more data comes out. And especially again, remember, we have lagging data. We have the data is already lagging, but we have reports that are missed, right? And I believe those jobs reports and the other certain, I think CPI and all that is going to be after the Fed rate decision. So Fed, I think, is December 9th, and the jobs report and all those other stuff comes out like the 16th or later. And then global economy shifts and market insights. So some global economic themes that we have across the board. We're going to keep running into the ground with it. AI overbuild. As we know, that's been the talk lately. AI bubble, AI bubble. So growing concerns over excessive investments, things like taking on debt for data center build outs. And there's also the worry of the pace of adoption, which is something that has been discussed about. Read some articles, but pace of adoption is just like, yes, we have these tools. Yes, they're developed and created, but how efficient and how productive are people actually with the tools? And we're not talking about on the individual level. When you go home, use ChatGPT, Gemini, Perplexity, Claude, and all that. We're talking about on an enterprise level, business to business type level. Is it making your company perform better? Are your employees performing better? Can you eliminate a whole department because I don't need 20 people working on this? I just need two of them and an AI, two of them in a language, a large learning language model that could help them out with it. That's where it becomes like, okay, we start seeing that, then there's motion in it. There still isn't mass adoption for it. We see stuff like Microsoft trying to enroll Copilot in all their devices. And I don't know if you ever used it, but you got Microsoft Word, Copilot's right there. Excel, Copilot's right there. And your little search bar, Copilot's there. It's everywhere. When you go into Google now, there's AI mode, all of those things. They're trying to force it in a way so you could jump in and use it, but it doesn't matter for the everyday person how they're using it. It really matters. If this thing really takes off is how are these companies using it? How is it being implemented across, sectors, across departments, across industries? How much of an impact it's really taking, right? When we start seeing that, then you're gonna really start seeing a shift, I feel like, in the growth of it. Because right now it's still up in the air. People are saying, oh, well, this is gonna be the future. Which me personally, I do believe it is gonna be the future. But a lot of companies are so behind on it. Like personally, companies I've worked for, they introduced the AI model or AI agent, and no offense, it's not impressive at all. It's just like, oh, okay, thanks for giving me this tool. And it's like I could go use something else that's way better than this. But it's again how the companies are going to be able to take it and implement it, right? Excuse me. Now we have a policy shift. So this came across right as a speculation, rumor, or you know, however you want to view it. But China looks like it might be back in play again for Nvidia chips, right? So if you've been keeping up with the chips and everything, Nvidia's essentially like banned or barred from selling chips to China, which is like, the second largest market that could buy chips from them. So they're still making a killing of money, right? Without being able to sell to China like that, right? But now policy shifts might happen to allow Nvidia to sell H200 chips to China. And if you do keep account of what's going on with the chips and everything, China doesn't get the best version of the chips. They get like a watered down version, right? Because the US prefers to give out the best to adversaries or to other parties that, that it doesn't see eye to eye with, right? So that happens. That is a game changer for Nvidia, but then it also impacts, I would say, the AI war, the AI race, whatever you want to call it, because China, I'm pretty sure has some good products themselves. I'm not sure how well they compare to the H200, but for the fact for this to be such a big deal, for them to get access to it again, and if they do, you could definitely see some improvement and some robust growth over there for them being getting their hands on it, right? And then now we go over to Japan. Japan's prime minister is going to throw out the stimulus pack. So he's going to deploy $135 billion out there to the people. And we know what happens when people get their hand on stimulus money. They end up spending. Now, I'm not too, you know, um, well informed about the Japanese economy, how well they spend their money, how well they save their money. But again, anytime, usually human nature, you get some money, you might pay some debt off, but most likely the stimulus, that's what it's for, is to stimulate the economy. The money is given to you to encourage you to go spend, right? And then on top of that, the Bank of Japan is also going to do a rate hike, which I'm also finding, excuse me, pretty strange that they're doing both of those things, right? So stimulus pack going out and they're raising rates at the same time. So kind of weird dynamic for me. And then we got the oil market. So crude prices are going through a slight decline right now. So that's just probably a sign that there's an increased supply on the horizon. The correlation between um, oil market and the stock market, it's hard to really find correlation to it because there could be many layers to it. But one of the things that probably could be kind of like good for this one or kind of obvious for it is that more supplies come on the horizon. We do have some conflicts overseas that hopefully are coming to an end. And one of them, if you know, is a big supplier of oil. So if they're able to get their stuff straightened out. Then read a report too that China's building up on their oil reserves. So those type of things where there seems to be more supply than demand in the pipeline, right? And then back to gold. You've seen gold run crazy this year, along with silver. And gold has had a nice little dip off of its highs. It's still trading sideways, still consolidating. Definitely reached some exhaustion, and it barely ended in the green this week, but still is a good I would say still in a good spot, right? But cautious as well with it, right? You never want to jump into anything. But I think after hitting all-time highs again, I'm big on the whole, nice little 10 to 20% cut off from the top. Good point for entry. And then if you read through this, if you're a quick reader, you're gonna see the same recurring themes. These are all the indexes and their ETF equivalents: SPY, QQQ, and DIA, and they all pretty much have the same story. They all have fallen to the 100-day SMA, and for all of them, the last time they were here is February. So go back to the beginning. I mentioned everything for the most part, broad base is in a decline. All right. And when this happened last in February, right after that was Liberation Day. So we all know in April what happened. Market crashed like crazy, eventually bottomed out, and then that's what led us to this historic run. So the 100-day SMA is one of those indicators, usually a good indicator that something bounces off of it. It's a good sign that we're going to still continue to rally on. Falling past the 100-day, not a good sign. It's going to find the next, moving average. Me personally, I like to use the 100-day, 200, 253, and then recently I started using the 400. But so just some good indicators to look at when they fall. For all this right here, these are on the daily chart. I do like entries on the weekly chart just because it's more confirmation that we are in whatever trend it is that I'm looking for. And then upcoming market catalysts. Again, it's going to be coming up. We have Fed meeting in December. That's going to be big. Depends on how you view it. The jobs report, how much you take into that, and then also we'll see the CPI. That's going to give us a good indicator of like how inflation's going and stuff like that for the consumer. And then sales data. So we know Black Friday's coming up. A lot of people gonna do their Christmas shopping. Cyber Monday, people gonna do their Christmas shopping during that time. And then those numbers, since it's in November and all that stuff happens, should be available sometime in December or maybe a week two after. And then it'll give us some good insight on the strength of the consumer, what they're spending on. Look for people like Best Buy to come out and say something. People like Walmart, Target. It's not earnings report, but look for them just to, be on CNBC or be on Yahoo Finance or articles coming out saying how much people spent on Black Friday, Cyber Monday, all those type of things, right? Amazon, that's another big one. So give you a good gauge, especially they're gonna probably do comparisons like year over year, things like that. So that pretty much wraps it up for this week. I do want to appreciate and say I do appreciate it and thank you guys for coming in, listen to me, talk, ramble. But I do hope I gave some good information for y'all to gear up for going into next week. And don't forget, subscribe, like, comment, share. Give me some ideas of what else you guys want to see. You can visit the website, thewealthcatchers.com, to get some more info. If you like to read articles, that's definitely a good place to go. Also, you can send me an email if you got anything to say in private. And don't forget, practice secure your wealth, all right? That's what we're here for. You have a good one. Thank you.